What if you only needed two ETFs to build long-term wealth, one for income and one for growth? Because that's exactly what I've done in my portfolio. Today, I'm going to be showing you guys why I chose SCHD and SCHG as my two long-term core holdings. Stick around because most people either chase these dividends or specifically growth, and I think that's a mistake. And when you blend these two together, you get the best of both worlds. So for complete transparency, like always, these two ETFs make up a large portion of my portfolio. You can see SCHD is about 33%. And if we go back to SCHG is about also 33%. And I have one risky play, which is NVIDIA, that I currently have about 15%. And I did trim this once when the price went up to 206, 205. That's when I sold about $10,000 worth. So I'm not trading these ETFs. I'm not flipping them. These are just long-term hold through everything positions for me. It doesn't matter what's going on in the market. I'm going to hold these day in, day out, and I buy them every single day. Pretty much I want cash flow today, and I want that wealth expansion over decades without constantly having to guess which stock is going to be the next big winner. And this is where this combo comes in, SCHG and SCHD. So we're going to go back and start with SCHD, which is the Schwab US Dividend Equity ETF, which is one of the most popular dividend ETFs out there, talked among many people. This fund specifically looks at the highest quality stocks in America that pay reliable dividends, they have strong balance sheets, and they grow the dividends over time. That compounded dividend growth is one of the key things about SCHD that makes it very popular. If you look at the past performance of SCHD year to date, they're only up 0.49%. If you factor in the dividends, they're probably up like 4.5, maybe 5%, which is lagging behind. And many people would hear that and then they would skew away from it. But the thing people don't understand about it is those dividends that you get from those dollars you initially invested will grow about 10% a year on average. So it's like getting a 10% raise at your job every single year. And if we switch back to SCHG, this is the growth ETF from Schwab. And this is what focuses on those big companies like NVIDIA, Apple, Google. These businesses, they pretty much reinvest all their profits, so they don't pay any dividends, or if they do, they're very low. And historically, these have outperformed during strong bull markets. As you can see, 5 years, it's up 104%, which means you would have doubled your money in 5 years, which is a really good return for people that don't know much about investing. So the combination of SCHD and SCHG aren't competing ETFs. They have 0% overlap and they're complementary. And if you look at the past 10 years, if you would have held them both for the past 10 years, 50-50, you would have beat the S&P 500 by a pretty big margin. And when you combine them together, you kind of get the best of both worlds that'll protect you in a down market and will outperform in a bull market. And if you ever decide to go ahead and sell SCHG in the future, you could sell SCHG and keep SCHD and keep those dividends coming in from SCHD and then reinvest the profits from SCHG into higher paying REITs, maybe something like O. If you go to Realty Income, they pay about 5.65%. So you could take that money you made from SCHG and put it into O to get that dividend income that you want to live off of. Overall, that's why SCHD and SCHG are my two long-term picks for income and growth. When they're working together, you get the best of both worlds. Let me know in the comments, do you guys prefer dividends or growth, or do you run like a similar combo as I do? If you want to follow along as I keep building this portfolio long term, I plan on using margin in the future to grow my portfolio faster. Make sure to like, subscribe, and I'll see you guys in the next one.